Good evening and welcome to Capital Market. I'm Chimeze Obi Iwagu. We'll begin from the global market. Well, this week saw global stocks fall sharply as investors were spooked by a jump in U.S. inflation, prompting fears that the Fed will tighten monetary policy. However, global stocks pared losses on Friday after dovish comments from Fed officials allayed fears of an abrupt end to reflation trade. In Europe, the European stock 600 closed higher by 1.2%, with autos adding 1.9% to lead gains, while basic resources was the only sector in the red, shedding 1%. Commerzbank led a broad rally for banks, climbing 3.6% after price target raises from independent research and Morgan Stanley. And stocks in Asia Pacific mostly rose on Friday following an overnight bounce for stocks stateside. Shares in Japan led gains among the region's major markets. The Nikkei 225 jumped 0.32%. That followed a more than 2% plunge seen on Thursday. Mainland Chinese stocks also closed higher, with the Shanghai Composite rising 1.77%. In the meantime, U.S. stocks jumped on Friday, led by technology shares and reopening trades as Wall Street rebounded for a second day from steep losses earlier this week. The Dow Jones Industrial Average climbed 360.68 points, nearly 1.1%. The S&P 500 gained 1.5%. The tech-heavy Nasdaq Composite, the relative underperformer for the week, snapped back by 2.3%. The major averages experienced a roller coaster week that saw the blue chip Dow drop nearly 1,200 points from Monday to Wednesday. And back here on the Nigerian equities market, despite the shortened trading week due to the public holidays on Wednesday and Thursday, the bulls regained control of the market following what some analysts would call a flawless victory over the bears in the 3 trading sessions of the week. The all-share index was up by 0.72% week to week to close at 39,481.89 points. And we saw the year-to-date return moderate to 1.9%. Activity levels were weak, though, as trading volumes and value declined significantly by 52.4% and 53.9% week to week. We saw that buying interests were largely concentrated in banking stocks. Investors' interest in international breweries and bargain hunting and Zenith Bank, Access, Guarantee, and Dangote Cement were the primary drivers of the positive performance this week. When we look at the performance across sectors, we will see it was broadly positive, with the banking index topping the gainers chart, followed by the insurance, the industrial goods and consumer goods. And of course, the oil and gas index was up 0.10%. And here are some of the capital market news that made headline in the week. Well, capital market operators who failed to renew their registration at the expiration of late filing on May the 31st will not be allowed to carry out their operations. According to a statement released by the Securities and Exchange Commission, the move is aimed at reducing licenses of unethical practices by operators and to strengthen supervision and monitoring. In the meantime, the Securities and Exchange Commission now plans to register brokers selling stocks of foreign companies as more Nigerians pile into the assets to hedge against inflation and currency weakness. The regulator wants to draw a curtain on a period that saw legions of young Nigerians turn to online platforms to invest in stocks and digital currencies. The need to protect savings took on more urgency after the central bank devalued the local currency 3 times within a year, while inflation accelerated at the fastest pace in 4 years. And rating agency S&P Global is the latest to comment on the FBNH board changes. The rating agency says the recent changes to the boards of FBN Holding and its subsidiary First Bank of Nigeria by the central bank has addressed corporate governance challenges and ensured the banking sector's financial stability. A statement released by S&P explains that while the recent actions may be disruptive in the near term, it may signal a more direct supervisory approach to alleged failings in the management and governance of regulated institutions. However, S&P hints that the bank's overall credit profile has gradually stabilized since 2016 with a capital adequacy ratio of 17% in 2020 as against a 15% minimum requirement. Okay, joining me now to look at the Nigerian equities market in the week is the Registrar, Chartered Institute of Stockbrokers, Adedeji Ajadi. Thank you very much, Mr. Jadi, for joining me on the show.
Thank you.
Well, it was a short week for the market. Well, you guys are back from your holidays, so activities have started again. And we saw the bull make a comeback. How would you describe the week?
Yeah, that was a very positive week for the capital market. Light at the end of the tunnel, because if you notice right from the very beginning of May, it's been a season of the bears, and it could be discouraging. But once in a while, it's good that you see the market come back strong, just like we saw during the week. So that it was positive for the capital market.
So light at the end of the tunnel. Are you saying that this positive trend that we have seen this week is going to be sustained? And if you're talking about sustainability, how long is that going to be?
Well, I'm not going to say that. What I would say is that it shows us once more that markets run in cycles. So you have a cycles of the bear, you have a period of the bears, and then the bulls come back strong. So people who are already getting discouraged when they see that pullback in the market, once they see that the bulls are coming back, it shows that, look, these changes are cyclical and temporary. So it gives confidence that, look, even if the market is not doing too well, somewhere along the line, something positive will come back again. So I think that's the signal that shows, and for me, it is good.
All right, so let's look at some of the news that came out during the week. We saw the Securities and Exchange Commission come out with plans to register brokers selling stocks of foreign companies. How is this move being viewed by the stockbrokers community?
Long awaited. I think that's a very good one too from the SEC. We have always thought that this segment of the market should be regulated. While it is good for Nigerians to have opportunities to invest, but there must be adequate regulation to ensure that people don't lose their money and that credible players are involved in that space. We've not had that for quite a while, but now that the SEC has come up strongly to say, look, this will be regulated, I think it's a very good one for the market.
Has there been some kind of infractions in doing in the process? I mean, for you guys that have been doing that, selling of the foreign stocks?
No, not everybody does that. I know what has happened over the period or the years is that those who have been doing that have actually done it on the back of existing stockbrokers as well. But it also needs to be regulated. Fintech needs to be regulated more in line with our own rules in Nigeria. So that's positive, even though we have not had major challenges. But we don't need to wait until that happens before the regulation comes in. So I think it's a good move by the SEC. All
right, another one is the SEC coming out with a reminder to operators to renew their registration. How far have your members gone in complying with this directive? Because I think this is just a reminder.
Yeah.
I mean, they had come out with that earlier in the year.
Generally, players in the market are expected to do that. If there is a provision for registration, I mean, it is expected that they should register, and a lot of people have been doing that. It's just a reminder that for those who have not done it, to go and do the right thing. And it is important because it's part of the regulatory process to ensure that, you know, those who are operating the market are qualified to do so. They have all the requisite requirement to be able to operate in the market. So that's okay. That's good.
Okay, so another one. I mean, First Bank, you know, that has been that company has been in the news for some time now, and this week we saw S&P come out with a statement that indicates it's in support of the board changes to a reasonable extent. And then you will recall that Moody's had announced that it would review its ratings and assessment of FBN for a downgrade, while Fitch, on its part, said the change in the board won't affect the institution's profitability and asset quality, and affirmed First Bank's rating at B- with a negative outlook. What do you make of these perceived conflicting statements from these rating agencies?
Well, maybe my own general perception is that it gives a lot more confidence when you see that the regulator comes in at the right time to sanitize the market when they think something is going wrong. So for me, I think I align more with the position of the second rating agency that just said, look, this should not affect fundamentally the performance of the company, because the fundamentals of the companies are there. It's just at the board level. So, but secondly, regulation also gives us that confidence that the regulator is not just sleeping. When something is about to go wrong, they need to step in and correct it, and which is what the CBN has done in this particular case. So it's supposed to be positive, even for the bank and for the company.
Okay. Now, as we go into the new week, particularly looking at the week that we're expecting some kind of data, we have inflation numbers coming out on Monday. That's 17th, yeah. And of course the GDP number. And don't forget, the Monetary Policy Committee meeting is expected to also meet. That's on the 24th and the 25th. Yeah. So what should we be expecting in the market in the week to come?
Unfortunately, the situation with inflation has not abated. Inflation is a worry. Not only in Nigeria, in some other parts of the world, as you read in the news, in the U.S. market, inflation is a big problem. And as much as possible, the CBN will want to do something to moderate it. I don't see any major change in the policy pronouncement at this particular point. But what we need to do is to see what we can do to handle inflation. Until that is done, it will always have a negative impact on the market, on the capital market. And that's the challenge we've been having. So until something happens, inflation is moderated, and the macroeconomy would have a lot to do in ensuring that we achieve that. So I really don't see any major drastic change in the coming week, in terms of policy decisions to be made. So we should still expect volatility in the market until we have some really strong positive signals that will drive the market up positively. We just manage ourselves for now.
Well, the earnings seasons are actually gradually tapering, and of course, expectation for the second quarter. Okay, and do you see that also driving sentiment in any way?
Yes, as expectations of earnings coming, as we get closer to when those earnings results will start coming in, then there will be more positive signals, expectation as companies will do well. And they've not disappointed. Companies have actually done well despite the challenges of the time. So I think positive expectation of earnings would have some positive impact on the result in the market in the coming weeks.
All right. Again, in the coming week, the NGX says it's launching what it called the stock Africa is made of. What is this all about, and what should we be expecting?
The NGX has gone through a process of transformation. It's now a demutualized exchange. It has subsidiaries now. It's a group company that has 3 subsidiaries. A whole lot of changes happening around the Nigerian exchange group. And so it's important for the public to know, to understand what the new brand identity of the NGX is about, and to see how we can benefit both locally and internationally. So I think the most important thing about this is this campaign to ensure that the public understands what is happening at the NGX and to be able to key into the opportunities that will come with it.
All right, I guess that event is scheduled for Tuesday. I guess, so we look forward to that. Thank you very much, Mr. Jadi, for being with us this evening. We do appreciate it.
Thank you. I'm happy to be here.
Adeniji Ajadi is the Registrar, Chartered Institute of Stockbrokers. All right, we take a break, and when we come back, we will try to understand the word securitization in the capital market on the segment The Explainer. Please stay with us. All right, today on The Explainer, we are shedding light on securitization, its benefits and risks to listed companies. And Professor Uche Owaleke joins us now from our Abuja studio. Good evening, Professor Owaleke. Securitization, what does it mean?
Yeah, good evening, Chimeze. Compliments of the season.
I wish you same.
Securitization, yes, securitization is the process of converting income-generating assets, be they loan receipts, be they lease rentals, into securities that are traded on a securities exchange, into tradable securities. So securitization is simply the process of creating what is called asset-backed securities. And it is one thing that, if it gains footing in Nigeria, will go a long way in deepening the capital market. Especially for its variants, the mortgage-backed securities, it will go a long way in unlocking the potentials that we have in the housing sector. This is one sector that we have been told has as much as 17 million housing deficit. Now, back to the point, permit me to describe it for want of time in very simple terms. The simple conventional structure of securitization usually starts when a company identifies some income-generating assets that it wishes to take out from its balance sheet. It wishes to realize very quickly and to gain liquidity. So the company now pulls these assets. I've given examples earlier. They could be loans, that is loan receipts, or lease rentals, or credit card balances, or whatever. Now pulls them into what we refer to as a reference portfolio. Okay, so the same company now transfers this reference portfolio, or sells them, if you like, to an investment firm or a firm set up specifically for the purpose of issuing them as securities, known as special purpose vehicle or special purpose entity. So the special purpose entity buys them from this company. This company, by the way, is referred to as the originator. So the special purpose entity collects these assets, from the originator, that is the reference portfolio, and then structures them, into various classes. Most of the time, that's what happens, into senior securities, junior securities, and so on. That it has a purpose. I will come to that later, and then issues them to investors as securities. So investors take them up, and of course become entitled to interest payments, and of course the principal repayments. So that's securitization in a simple form. Of course, it has a lot of benefits. From the point of view of the originator, the company doing that, of course, it will put the company in a position to get more liquid, to raise funds almost immediately. In the case of banks, for example, it puts the bank in a position to even make more loans, because when a bank pulls its loans into a reference portfolio and sells them, it frees up the bank from liquidity constraints, and then enables the bank to be in a position to make more loans. On the part of the investor, it's an opportunity, a very good opportunity to diversify the investments, especially given the fact that asset-backed securities, if you have them in a portfolio, don't usually correlate directly with the other investments, other securities you have in the portfolio. So when you have a portfolio that has negative correlation, as it were, of course, your risks are minimized. So it's an opportunity to diversify portfolio. For the government, it also has some benefits. Remember I said it's about securitizing or collateralizing receivables. The government too can decide to collateralize any self-liquidating assets, any receivable or any asset that has a cash flow, a steady cash flow, collateralize that, raise some funds, and use those funds to finance especially infrastructure. If you look at what is happening in China, for example, China and Japan, they have been using collateral securitization to finance some infrastructure projects, especially road projects. So in China and in Japan, Hong Kong, what they do is they securitize the toll revenue, securitize for the purpose of maintaining expressways. Italy too, uses securitization a lot, especially when it comes to again, infrastructure, which is why in recent times Italy keeps updating its securitization law and promoting real estate investment trusts, which is also a variant of a securitization. And recently too, we had in Malaysia is setting up a real estate investment firm. They're calling an airport REIT for the purpose of again expanding the airports. REIT, by the way, REIT, means real estate investment trusts. Okay, so there are securities that are issued by companies that own and operate, if you like, income-generating, properties. And of course, in Nigeria, the REIT culture, if you like, hasn't really been entrenched. Since 2007, we have just managed to register just 3 REITs. Yes.
Professor, may I come in there? I mean, we've talked a lot about the benefits. I'm sure this securitization would, of course, have its risks. So what are the risks there? Okay, 2 major risks I want to identify. The first is credit risk. Credit risk, just as with every lending, the risk that the original borrower of the loan, may default. And then prepayment risk. Prepayment risk has to do with the risk that the investors, may decide to pay back, or the borrower may decide to pay back the loan, earlier than expected. So that disrupts the cash flow of the securities. So these are the 2 risks: credit risk and prepayment risk. And usually what happens is that to mitigate these risks, asset-backed securities come with credit enhancers. Credit enhancers in the nature of guarantees by the issuer, guaranteeing both the principal and the interest repayment, as well as credit rating. Okay, and one way to mitigate the risk of prepayment risk is to cut the, to structure the reference portfolio into tranches, in such a way that you're taking into consideration the maturities, the interest rates of the various loans, as you have grouped them. And then because they have different risk exposure, of course, they also attract different level of returns and yield and credit rating. So the senior tranches, for example, will have low risk and, of course, lower yield than the junior tranches. All right. Thank you very much, Professor, for making us understand that word, securitization, in the capital market. We do appreciate your time. Professor Uche Walike is a professor of capital market at the Nasarawa State University. Thank you very much for your time this evening.
My pleasure, Chimeze. Thank you very much.
And that's it on Capital Market this week. Join us next week for another edition. I'm Chimeze Obi Iwagu.